Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I'm going to be taking a look at the stock market, various macro indicators, as well as the Magnificent Seven stocks. So, starting off with fear and greed, you can see on CNN we are back down into fear. So, we were down into fear a few weeks ago, popped up into neutral, have gone back down again. It is starting to get a little bit of a bounce, so possibly look for some investment opportunities at this time. And just something macro wise to keep in mind is that since 1932, the S&P on average around the time of the inauguration can go down or sideways for 100 days, give or take. Now, remember, we didn't get that Santa Claus rally that everyone was hoping for, so maybe this started out a little bit earlier than normal, and 100 days from January, that'd take you somewhere around March or April if a trend like this were to play out that long. Other macro charts to keep in mind is that the second year of a presidential cycle tends to be, on average, the weakest. So there are a lot of macro concerns out there about the markets overall. So if 2026 is to not be so good, then that would definitely be a time that you wouldn't want to miss those opportunities. So if you see the S&P dipping by more than 20%, 20, 25, 30% plus, those are the times you want to invest. At least historically, those have been the best value times to get in. And then the Fed, they paused rates. Now remember, they cut rates back in September, but as far as recessionary or non recessionary cutting cycles, we're definitely in this non recessionary cycle. And you see this goes out for 250 days, which is about a year. So that'd be kind of around the summer, September. And I know the summer isn't always the best time for the markets, at least on average. But I've even seen charts that extend this out a little bit further. So far, so good as far as those macro concerns go. And as far as the S&P 500 price to earnings ratio overall, do remember this is on average a more expensive time than usual. Not that it can't get more expensive or into bubble territory. We're almost in bubble territory or very close to it. I'd say maybe at the start of it, but it can definitely go up higher according to this metric. Now, I recognize a lot of you are here primarily because my crypto analysis. However, we recognize that crypto is affected by what the stock market does. So, subscribe if you want to hear more about any crypto related news. I talk about the cyclical indicators and what Bitcoin's done. I talk about mining stocks. I talk about altcoins, and I also try to do live streams every Friday if I can. So right now, crypto, it is in neutral territory. I know it says fear, but overall, it's still in this downtrend. So we're looking for this to reverse up, and kind of like I showed you with that inauguration chart. Maybe we have another few weeks or a month to go, just something to keep in mind overall. But let's start off with the S&P 500. So you can see here on the weekly, still around that all-time high range territory, got down to the 20-week moving average, came up, got a little bit above the all-time high, and now coming back down again. You see that weekly doji. But overall, we've been in this massive upward channel ever since the great financial crisis and have been continuing to go up within that channel. So my macro targets overall, should things get very bullish, it would be the mid 6,000s or the, let me scroll so you can see that better, to around somewhere around 7,000. That's if this continues churning, because that has been as high as the prices have gotten in this channel overall. So something to keep in mind there. As far as other indicators go, if you're looking for possible reversals or weakness at these tops, there's a couple ways to go about it. We can look at the relative strength index. No doubt this is showing bearish divergence. We see the peaks getting lower there. We have the stochastic RSI that I like to use for dollar cost averaging, and this is recently bottomed out, so has some room to run there. And there's other indicators as well. So nothing I'm concerned about quite yet. Possibly famous last words. But yeah, you can see when it bounced off that 20-week moving average that was around, that parallel trend line as well as that 100-day moving average. So came up, made a new all-time high, kind of chopping lower. So far the 50-day held, and should this be another lower high, look for that 50-day or the 100 to hold and possibly get a bounce. As far as the volatility index, the VIX, the volatility of the S&P 500, still relatively low volatility. There have been some recent spikes, and they kind of come out of nowhere when they do. So the most recent spikes we had was last August, the yen carry trade unwind, as well as December. And so just low volatility so far. That means good for the markets as far as right now. Another chart I've been paying attention to is the percent of stocks above the 200-day average. And something you'll notice overall is when it's at around 50%, at least recently, ever since I guess December of 2023. So for the last year or so, when it's down here, that tends to be around local bottoms. Yes, it can get a little lower, but when it gets around 70 to high 60s, that's when the local tops tend to be, and we're not near that yet. Now, you can see on this recent pump, it got rejected by the 100 and the 200-day moving averages. 200 dark blue, 100's the light blue, 50's the orange, 20's the red. And so if it starts getting through this, then you can expect some more bullish times in the market. So this can be somewhat of a good leading indicator. Now, as far as that second year, the presidential cycle not being so great, one of the reasons why people talk about that, well, there's two reasons. Macro reasons why. One, we have crypto that goes in 4-year cycles, and 4 years from the bottom tends to coincide with those lows in the market. So 2022 plus 4, 2026, it's when a lot of people are expecting the next crypto bear market. We'll see. Timing can always change, so I try not to be too married to that stuff. But you can see here, after the dot-com bubble and great financial crisis, once the yield's uninverted, it's around 500, 600 days, and that 600-day mark would put us out somewhere in 2026 from the time this uninverted. Now, politics aside, though, I'm going to talk about something political here. I'm not saying you have to agree or disagree. You see May 26 over there. Some people are saying that with all this tariff stuff that Trump's trying to implement, or at least talk about that, he's doing that because he's also asking the Fed to lower rates, which the Fed is not. Why? Because inflation is still a sticky problem to them, and unemployment isn't so much of an issue. So what some people are theorizing is that Trump's enacting these tariff policies in order to try to bring the yields and the dollar, the DXY, down, because in those environments the market still does well when the yields are going up and the dollar's going up. Overall, that tends not to be so great as far as investing and making money. So not sure how true that is, but that's a narrative I was reading out there, and yeah, something to keep in mind. As far as the unemployment index, I'll have to take a look at when the new data is released, but still within a reasonable range. Next time unemployment comes out, if it's at 4.1 or 4, markets will probably still do pretty good. As far as Bitcoin goes overall, let's get this fixed here and zoom way in. You can see that 1618 around 102K tends to be sticky, and this week it's had quite a candle down. Now you see this wick, it's being bought up, so going over to the daily, got bought up nicely off that 100-day. So there are buyers, but right now Bitcoin is being rejected by that 50-day moving average. So don't be surprised if Bitcoin came back down around 93K, give or take. So let's get into the Magnificent 7 stocks. And here with NVIDIA, remember this one red candle, when the whole DeepSeek AI thing came out, this one red candle, some people are estimating that it was almost 600 billion overall that got wiped out worth of NVIDIA, because its market cap was over 3 trillion and it went way down. So getting a nice bounce, NVIDIA, off this 200-day moving average. So 200-day moving average, it's typically close to the 50-week moving average, and you'll see it right there. So as far as this whole move up since 22, this is the first time NVIDIA has ever come down to the 50-week moving average. Now, the 50-week is typically the dividing line between bullishness and bearishness. And so if it gets a nice bounce off the 50-week, it's still technically bullish. Now, some of the indicators I use with certain buy signals, I tend to be more risk on in bullish scenarios. But if it were to get under, I tend to be more cautious and wait for more confirmation signals when I invest. So even though this could be discounted deep value and that's all fine and great, I look for confirmation with the stochastic, the MACD, on the weekly, even monthly time frames. I look at the buy signals on the monthly time frames and make sure I'm not catching a falling knife because it can just continue chopping down. So if it is to break under the 50 week or any stock that you like, again, try to look for those confirmations because you might buy the dip and then it just keeps dipping. So that's just something I do for myself. But we'll see if NVIDIA can get a bounce off that 200. The 100, the 20, the 50, all there around 130. So NVIDIA, if it can get through that around 131 to 134 range, that'll probably be pretty good for it. So as far as Microsoft, so this fib, you can see I've drawn from the high to the low, took that fib off log scale, got to the 1618, and it's chopping around in this wedge right here. Now it's at the lower part of that wedge and the 200-day moving average. It's probably right by the 50 week. There you go. So if you like Microsoft the long term and you're okay putting money in this and thinking 20 years down the road, this ain't bad value because overall, so you can see, it's rare as we go back in time for Microsoft to be down there. Now, not to say in a recessionary environment that Microsoft can't get down and stay down there for a while like it did in, sorry, my training view isn't quite full screen. I have to fix that. Like it did for about a decade after the dot-com bubble. This can happen. Would you be willing, if that happened, to dollar cost average in for 10 years and then have all that pay off? So Microsoft overall considered by many to be the best stock in the world. So something to keep in mind, whether it's down here or gets in a recession down to the 200 week moving average, if not lower, just something to watch out for. But overall, this would be the start of discounted values, in my opinion. As far as Apple also came down to the 200, did have a nice bounce. It wasn't quite able to get and hold on to the 50-day moving average as support, but it is making a higher low, and we have a buy signal on the daily. So let's see what it does at the 100 and the 50 again, and maybe it can go further. So we do have these higher lows, recent higher highs. Yes, this is a lower high micro-wise, but overall, still looking good as far as Apple is concerned. Amazon, we talking about how this is looking nice and bullish in the 1618 fib target, where there's sure to be some profit taking will be around 255. So that's an area to watch if it does come back down. The 50 days at around 226. And as far as Google, hanging around the 1618, had that big sell off a couple days ago down to the 50-day. So far it's holding the 50-day, but you can see the 1618, the 50-day. Excuse me, if we zoom out on the weekly, what do we notice? Let's fix this here. The weekly, it's trying to take it, but it has this doji right now, this long-legged doji. So we'll see if it's able to hold. That means undecided is possible. Comes back down, retest one of these 20-week moving averages before going back up. And should it take the 1618, the 2618 fib is all the way up here at around 262. As far as Meta, this one continues to look great, and the 2618 fib is there all the way at around 860. And then we'll go to Tesla, and let me see how I'm doing here on time. Doing okay on time. I'll try to get the Palantir for some of y'all as well. So Tesla, we talked about this. This fib's off log. We were talking about this if it were to stay bullish, getting the 607 at the 1618 here. But what do we see on the weekly? It has come down underneath its former all-time highs. And so when it's within the range of the high to low of that fib we drew, we want to make sure it's on log scale. And with the sell signal getting rejected, we have the 20-week and the 888 here at around 351. So if you absolutely love Tesla, you have to have some. There's 351, but you can see there's a lot of room to go down. There is this fib, the 786, has been honored a couple times, and the 50 week is coming up to it around 303. So that'd be personally for me an area I'd wait for, but I wouldn't be surprised if it got a bounce off that 888 here as well. And then lastly, let's look at Palantir. A lot of people loving Palantir, and would you look at that? This is why we do moving averages and fibs. We see these bounces off the moving averages, and we see how it honors these fibs as well. The fibs is the golden ratio. So right now it's at the 2618 at around 107. So don't be surprised to see some profit taking there. But this one, there is a decent sized wick there. So it did have a little bit of a rejection off the 2618. But the 3618, the next target should it break through is 147. So something to look for. As far as the 2618, look at that. Big candle got up to it. Came down a little today. It's challenging it again. Is it just going to blow through? So we'll see. Right now it's knocking on the door. So hopefully for any Palantir holders out there, you might be able to see it get 146. That's the 3618. The 4236 at around 170. Anyways, that's going to do it for today. Like I said, I'll try to do a live stream tomorrow. Thank you so much for watching, and have a wonderful Thursday. Take care.